This is like my third take. I'm having a rough time getting this right today. All right, market is off slightly. Yesterday was really bad. Today it's a little more quiet. No blood, no panic. Did a little bit of house cleaning in the portfolio. No new trade. Getting a lot of downward bias ideas, but the thing is they're so extended to the downside, I don't think it makes sense to start establishing new short positions here or downside bias positions. And I am getting some upward bias positions, but you'll see today all the losses that I'm taking from the long side. I just don't really have a stomach to go long in this market right now. So I'm just gonna sit and wait and let this market set up so that way it'll give me a clearer direction of where I need to be. So for now, I'm just gonna do a little bit of house cleaning, try to trade here or there, wherever I can. Here's Simon Properties. I had to put Barefoot Vertical on this. You can see it had a really rough day Friday. It's having a rough day today. It's down about 3%, so I decided to take this off. So we had taken half off on the 12th, May 12th, and today I took the rest off. So we originally sold the July 15th puts, 120 strike price for $7.83, and we bought the July 15th 125 strike for $10.25. I ended up unwinding the position today for a 56% return. Done out of the portfolio, made our money. Okay, here's the Epam. I traded this a few times over the past couple of weeks. It's kind of got my number. I put the Barefoot Vertical on this. You could see this stock had a really hard time. They have a lot of exposure in Ukraine, a lot of exposure in the Russian markets. So as soon as that war began over there, you can see the thing got hit pretty hard. It came up. I thought it was going to kind of ride this moving average and then kind of roll back over, but it's hanging tough. It's, it broke its 20 to the upside, it broke its 50 to the upside, and today it's having a good day. I lost money with this before. I have this Barefoot Vertical in there, so I decided to unwind it today. All right, so here's Epam, Resilient SOB. All right, what I did today. So originally we had sold the July 15th 310 strike price puts for $34.70, and then we bought the July 15th puts, 320 strike price for 39 cents. Today I unwound the rest of the position for about a 15% return. What's nice is the first half I unwound for a 69, call it a 70% return. So net we made money with this trade. All right, here's Lockheed Martin. Lockheed Martin, I got the bull call vertical. I actually have two different positions on it. I closed them both out today. This is the weekly chart. It could hit its 20 week here and bounce higher, and I do have some time left, but it's just been acting terribly. And I decided to cut my losses short. The first one we did here was this bull vertical, right? So we had sold the June 17th 460 strike for $12.30, and then we bought the June 17th for 450 calls for $16.50. I ended up closing the position. I lost about 66% on the trade. Ouch. The second portion of that trade was done today. So I had bought the September 16th 445. I had sold the September 16th 445 calls for $27.06, and I bought the September 16th 440 calls for $29.56. I unwound that over the course of the day. Lockheed was way lower, and it's way off the lows now. It seems to be coming back a little bit. Still down on the day, but having a better day. So I took advantage of that, and I only lost 18% on this part of the trade. Still sucks. This is AMT, American Tower. I saw this break above its moving averages here. The 20 crossed, this is the daily, so the 20-day crossed the 50-day. It came up, found some support, started to rally up again. I'm like, okay, this thing is starting a new uptrend. It bounced off its moving average, found its support. I anticipated this thing was going to travel up, and at the very least try to retest these highs that it hit previously. And that just didn't happen. This thing just rolled over hard. I just don't see any outs on this, so I'm just going to cut my losses short. So I had bought July 15th 270 calls for $11.80. I bought them, and I sold them today for just over $1. Ow. So that's about an 88% loss. That sucks. Here's Cardinal. Cardinal was acting really nice. This is the daily chart, so you can see it was riding its 50-day up, had this nice gap up on good volume, and it wasn't a gap, just a big day on big volume, consolidated, spiked up again on good volume. So I was like, all right, this thing is off to the races. I think right around here at this spike, I ended up putting these positions on in early April. And it was working for a while, and then just the whole bear market thing took over, and you can see it came back down. I had some hopes here that it hit the 50 and bounced higher. Didn't really work out. It's continuing to sell off. I don't see any outs. I don't think I could either let these expire worthless, or I could just try to salvage some of my capital. So that's what I did. I closed this out for a loss. All right, so I had sold the September 16th 65 calls, $2.56, and then I went ahead and I bought the September 16th calls, $6 strike price for $4.61, and I sold them today for about a 51% loss on the trade. This is Henry Schein HSIC. Boy, did I get hurt on this one, right? So it gapped up, it broke out, it broke above, this is a breakout above this consolidation period. And I was like, all right, looks great, it's breaking out. It was riding its 20-day up, came down, hit the 20-day, had this nice move up. Not on great volume, maybe I should have taken that into consideration, but I was like, okay, so this thing is going to continue higher. It had a nice bounce off the support. And then like the next day, it just completely fell apart. And now it's riding its moving averages down. So it doesn't make sense for me to be long calls, and there was a little bit of value left in them, so I was like, you know what, I'm going to have to lick my wounds here and try to preserve whatever I can. HSIC, I bought the calls. This is July 15th, 95 strike for $2.85. I ended up selling them today for 40 cents. That's an 86% loss on my capital. No good, but it happened, we'll recoup. Here's PerkinElmer, PKI. I put the Barefoot Vertical on this one here. In the downtrend, riding its moving averages down, hits just the daily chart. So I hit its 20-day, kind of started rolling over. I put this Barefoot Vertical on. It's kind of stubborn here. It's hit this level numerous times and just can't break below this 140 level. So I'm thinking it might have some support here. Maybe look back here in June. Also found some support there. So I don't know. I might be barking up the wrong tree with this one. Maybe this is not going to break down further. So I'm just going to get out of the way. It's okay to admit you're wrong. Okay, PKI, so this came in two parts. I took half off on the 11th, and I made about 81% return on that, so that was cool. Today, I took the remaining position off, and so we had originally sold the June 17th puts, 140 strike price for $6.40, and then we had bought the June 17th puts, 145 strike for $8.55, and I unwound that position today. The part today, I took a 51% profit, so all in all, it was a decent trade. I'll take it. All right, so here's JP Morgan. I actually have two trades on. So this one here is the bear call spread. So I just need this by tomorrow to close below 127.24. It's trading at 117, 118 right now. So I have a pretty good shot of just having this stay in the green zone. Those options will expire worthless, and I'll get to keep that spread. I also have this Barefoot Vertical on, so you can see it's off today. It's off almost 2%. It's riding its moving average down, so it's in a downtrend. I probably could have held this a little bit longer, but I decided to close out the position. Okay, so you can see here, this is the open spread that we have. We have 1 day to expiration, so that's going to burn off tomorrow. We'll be able to keep our spread. The one I did today is down here. So I had originally done this in two parts. So I sold the first half on the 12th, and today I closed out the position. On the first round, we made about 53% return on the trade, which is great. Today, we originally sold the July 15th 115 puts for $4.85, and then we had bought the July 15th puts, $120 strike price for $6.68, and I closed out the remainder of that position today for about a 24% gain. I'll take it. Like I said, there's not much in the way of new ideas. The market setup just isn't right to go long or to go short. So I'm just going to keep trimming where I can and just wait for a better setup. All right, thanks.